Welcome everybody, Technical Tuesdays, volume 26, that's right, 26. Now, I'm on my own today, and I'm just going to be going through some technical analysis. Unfortunately, there's going to be no hot topics, because unfortunately Nat got arrested this morning. He actually got arrested for stop loss lifting, which is a huge crime in this office, so we've had to kick him out, so he's not welcome here. No, I'm just kidding. He's actually gone to finalise the FOREX content. FOREX is now up and live on the servers. We will be switching it on in around 2 weeks or so. However, we're just talking with the rest of the team, with the other analysts and traders on the website, just to brainstorm and just to sharpen the whole website on the whole, because we do believe in simplicity, and we know how hard it can be at times to actually get a good source of trading knowledge / information in which you can apply yourself in order for you to make them all important pips and make money on the whole. So stay tuned. I'm also going to be releasing, running a live webinar. We did mention this a few volumes ago, where when the site is live, we're going to be taking you through the site, the different aspects of the site, where to find, the best things in which you're going to take advantage of, the free side and also the members side as well. So stay tuned for that. Now today, Tuesday, it's currently just 8 p.m. It's still light outside, which is a nice thing over here, especially in England. So yeah, today we had a student a student called Joshua. He's actually local to Birmingham, and Joshua's actually been following Astrofx for a year now, since we actually came up and about, on the YouTube, social media, etc. And he has actually been following all of our Technical Tuesdays. Technical Tuesday, he's been trading for a year. He's been learning himself certain resources online and also some books as well. Some books in which I've looked at myself back in the day when I was learning. But his main trouble was actually putting everything together. So first of all, when he came in here, we've done the theory side of things on day one, and I've just said to him before we get onto the charts, and I just gave him a chart, said show me what you can do, and he showed me a few things, but his confidence could have been a little bit better. So by him showing me what he can do and showing Nat what he can do, then we could basically integrate an all-around strategy for him and focus mainly on his weaknesses in the market, and then make his strengths even stronger. So today was great, and I'm going to show you one of the charts that we went through together on AUDUSD. As you see here on the board, we went through some trendline execution strategies, because a lot of people who do come often have trouble with executing the trade. They're quite good at spotting the overall trend, are we in consolidation, trending up or down, but again, just when it comes to the selection of time frames in which we should execute on, it's a bit scattered and all over the place. So again today, especially tomorrow on Josh's final day, we're going to wrap everything up together and give him all of the tools and a lot of trading setups to go away with. Now, as you can see on my screen, see the Aussie dollar chart. Now today, what I just showed you on the board, just going through how to put trend lines onto the chart, how to execute from trend lines, which bounce do we need, which break do we need, and so on. So here, Aussie dollar. Now Aussie dollar daily, very not last week's Technical Tuesdays, the one before, so volume 24, when we were talking about certain aspects of market manipulation. This was the up move just here. And we did say after this doji spiking through 7.9, we will in fact see a low, which we did see, and another doji was in fact put into the market, into this specific currency pair. Now, going forward, this could be classed as a false breakout of this descending trend line here. So we have 0.1, 2, 3, false breakout of 0.4, and now, dependent on how Aussie's going to close today, but this was just a few hours ago, this was the daily candle. As you can see, we spiked above and we're back below. As long as the price actually stays below that descending trend line right there, all we have to now do is break 0.7550. Now Aussie, it loves round numbers, so 0.7550 as support. We will in fact roll over, and and we will very likely to roll over and retest 1.7200, which is also a major barrier of monthly support. Okay, so as we can see, we measured the range heights, added them on and so on. So this was just some of one of his charts that he did today, and yeah, it was very impressive, very clean, very straightforward. Again, we're just piecing it all together, and we went over a few other little strategies in which made a lot of sense to him. He been obviously the information off our old videos he was trying to apply himself. But yeah, we cleared a lot of things up for him today and just put the pieces of the puzzle together. So that's Aussie dollar. So as long as we're below, let's say 0.7700, this pair is bearish, okay? And the downside target is 0.7200. So this is probably something I'll wrap up on next week. Even though the market has been consolidating mainly since the start of January, it's been quite frustrating. We're always trying to keep up with what price tells us in order for us to catch the nearest breakout and follow the trend overall. So that's that. Let me just get back on my Safari. So I'm going to start with GBPUSD. So here's GBPUSD. Yesterday on Twitter and Instagram we did actually post up a buy trade on GBPUSD. Now I'm going to just run through why I actually did so, because I had a lot of people asking questions. Now let me start on the weekly chart. Last week, first of all, we had a pin bar, even though we're still below the moving average and so on. We had this pin bar, but what I was looking at primarily, because I had a buy on this trade on Thursday. First things first. Okay, right. First things first. Now fib. Let's take a fib from the highs to the lows, sort of retracement. Okay, for you guys who remember, I was posting. I think it was before we started to do the Technical Tuesdays. Again, we came up and we had the bearish engulfing of 61.8, and I did say 1.4750, 1.4700 is the downside target, and as you can see, we hit that target, and because that Fibonacci was in fact fulfilled now, that's where the market had stalled. So all across here was a major area of support. Obviously we spiked up off some FOMC, however we closed back below here, and you can clearly see again support turn resistance. So we could say from here 0.4700s to 1.5, we are in a range of 300 pips. Now the markets came back down and we had 1, 2, 3, we could even say a lot of this is indecisive, but we had 3 indecisive days in a row. So we've had this little bit of follow through off non-farm payroll last Friday, and I did think, okay, this is kind of engulfing some of the price action here. Can we go a little bit higher? Last night I did go home pretty late, and after calling this long around here 1.49, it did make a high of nearly 1.4980 say, and then the things just collapsed. Now looking at this on this 4-hour chart, now we can clearly see the range of consolidation, how choppy it has been. Now a lot of people, it's hard sometimes hard in a range of consolidation, because we normally want to follow the trend and go where the momentum goes, but we've been struggling recently mainly with some of our entries. Mainly because obviously the way we trade and the capital we have, we can actually use like a pretty decent sized stop loss and cater it to our needs. Sometimes we have to, as I mentioned on one of the other videos, when the volatility's kind of low and we're in a consolidating market, we may have to switch up to maybe taking profits intraday. Last night I didn't get to take my 70-80 pips profit. I came all the way back down to break even and was stopped out. However, it does look like we're potentially rolling over right now, and we can clearly see on this 4-hour chart that yes, we did put in a kind of doji / spinning top here at this level of resistance. And again, you hear me say this over and over again, there's never just one area of support or resistance. I like to always just highlight this range. So as you can see, we came into the range and it looks like we are pulling back. However, if I go and if I can take this as a bottom here, at 1.4750 say, this is where the consolidating dojis were on the daily, and pull it up to the top of yesterday's high, we can clearly see that we are procrastinating around the 61.8 Fibonacci at 1.4830. So It's coming down to the 2 hour. For a sell setup, we could have easily just maybe added a counter trend line, which we have broke today. So I'm kind of 50-50 on this pair still at the moment. I'm going to have to see how today's daily close actually closes, because yesterday actually closed as a shooting star off resistance. So this could easily bolt down all the way back to 4730. In terms of a target zone for this to the downside, for a downside target, we could maybe add this onto here, and then we get our overall second D2 extension Fibonacci 1.4450. So keep that in mind for the downside. Now let me just root out my actual buy scenario on GBPUSD, which I had what I was actually anticipating for this pair to do, which is here. Again, this is something we went over today, and I found this 0.1 of the trend line, 2 of the trend line, extended it across, and where we were, as I say, procrastinating on support here, support here, support here, I was expecting an MA crossover to the upside, and I was just trying to envision the future, that if we cross this border here at like 1.4980, that we could in fact come up and make a third bounce around 1.52. So with that being said, that would have been an ideal setup, and I just thought, you know, let's just go for it. This market's been dead for God knows how long. I just wanted to take that risk and that leap of faith overall. Fortunately, it stopped out past break even. So I've just give you guys the two different scenarios on GBPUSD for the buy end and the sell end. So yeah, we're gonna have to just see how today's daily closes, and can we take out this 61.8 Fibonacci. If not, 4830, if you do see a reversal off this level, maybe on a 2 hour, maybe even on an hourly, you could probably go long with stops below like 1.4780. But again, just use this information in accordance to your own technical knowledge and your own market knowledge. So they're my two scenarios on pound at the moment. Because if this is just pulling back and it does retrace from the 61.8, we probably will see the next leg upwards push through that barrier and then go to maybe 1.5150, which will then complete this setup here. And then obviously if it does so, and then we see maybe a daily reversal around these levels, it could be simply a lower swing high, ready to make a new lower low overall. Okay, so that's GBPUSD in a nutshell. My GBPJPY, another one, which we've been talking about for the last 2 or 3 weeks now. Overall bias on GBPJPY does still remain bearish. I'll pull this cloud chart up on here. There's Ichimoku. Right. Last week I was watching this on the 4 hour and on the daily. Let me just remove everything off here. 4 hour on the daily. So first of all, let's have a closer look into what's been going on in terms of price. So 1.177 proved to be a huge barrier for this pair. As you can see, we dipped below it, whipped straight back up, spike below, spike below, spike below, and after I've seen so many rejections of 177, I thought, you know what, this could probably be lining up for a retracement to the upside, perhaps maybe even 179, 179.50. We pierced through 179 today. So on the daily time frame, as you can see, again, it's going to be interesting to see how this candle closes. We have in fact hit the 179 area of resistance, which is just around here. So we can clearly say 177 to 179, a 200 pip range that this currency pair is in at the moment. A current setup on this at the moment, as you can see, a shooting star reversal perhaps. And the other thing I had on before I removed all of my lines was this Fibonacci from highs to lows. So the fib from highs to lows, we could say that, yeah, as long as we're still below 179.30, the 61.8 Fibonacci level, then we are bearish still. And it could have just been wanting to pop up before it actually takes its tumble. And you can go watch our last videos when we broke this thing down for 175 and overall 172. So this could be like an elastic band ready to just pop off at the moment. So 175.25 and 173.70 downside targets, but ultimately we're looking even lower at 172 for other reasons, which I can't really be bothered to go through again on this video. So yeah, hit resistance, hit the Fibonacci, short pullback perhaps, and now it's ready to decline, which may also mean GBPUSD might be ready to decline, but I'm going to wait till maybe tomorrow, see what tomorrow brings. and tomorrow's close as well, just to get a bit more confirmation, because uncertainty is not too good in this market. You'd rather be patient and just wait for that extra confirmation, that trade to come to you. So I hope that was helpful on GU and GJ and also Aussie. All in all, if you can leave some topics maybe for the next, we've got some hot topics for the next few weeks now. However, we always like to hear your views and some of your questions, comments, observations on any particular subjects that you might want us to actually go over and speak about on camera, and so on, and get everybody involved basically. So yeah, that's that. If you can leave them down in the comments box, or just email us, contact@astrofxc.com. Look out for FNFX. Webinar will soon be announced for everybody to go through the website live with us, and yeah, we'll go from there. So GBPUSD, 2 scenarios, GBPJPY, and Aussie dollar all done. So I hope that was helpful, and we'll see you next week.